Hey, this is Chris from StockSpot. Now, Bitcoin has been one of the best performing asset classes, I think the best performing asset class actually over the last 10 and 20 years. Had a wonderful run from next to nothing to over $100,000 US. We often get asked by clients, how do you invest in Bitcoin? So in this video, I'm going to talk about the three kind of main areas that people look at when they're considering investing into Bitcoin. And the first one is buying Bitcoin directly through an exchange and then storing it on a hard wallet, which is essentially like a USB key, which you can keep at home. There are lots of exchanges out there that you can go and buy Bitcoin on. Coinbase is a famous US one. Independent Reserve is a well-known one in Australia. You go onto the exchange, you transfer in your Australian dollars or US dollars, buy some Bitcoin, and then move it onto your hard wallet for storage. Now, this is a way to store Bitcoin. The biggest risk is obviously losing your hard wallet or your private key, which is your access to that hard wallet, which actually means you lose all of that money. The other risk is if you don't put it on a hard wallet and leave it at the exchange, that Bitcoin or Ethereum or whatever it happens to be can get hacked and stolen. And this has happened many times at different exchanges around the world. Most recently, it was Bybit, which is an exchange where hundreds of millions were stolen. So there are risks of buying and storing Bitcoin on a hard wallet or an exchange, although some people like to use that method, particularly if they're comfortable with the exchange or have a safe place to store the hard wallet. The second way that I think a lot of people are buying Bitcoin, and certainly this has exploded over the last year or so, is through an ETF. So up until recently, most countries didn't have an approved ETF, but since the SEC in the US approved the Bitcoin ETF, recently there's been a huge amount of money moving into these assets. The big benefit of the ETF is that you don't have to worry about the physical storage. They store the Bitcoin for you. It's often insured. It's stored at a custodian level somewhere for you and protected. And so you don't have to worry about that. And it's easy to go on to a stock exchange like the Australian Stock Exchange and actually buy the Bitcoin through the exchange. So that's a way that's been really growing in popularity because it's convenient, it's easy. The downside of that is that the management fee you pay will erode some of your growth over the long run. So these Bitcoin ETFs somewhere charge typically between 0.2% per annum and some of them upwards to 1% per annum. So you're going to lose that money out of your returns each year, but it is a much more convenient way to store and save Bitcoin. The third way is one that some people consider that want exposure to Bitcoin without actually directly buying Bitcoin, which is buying a crypto focused ETF. So there are some ETFs out there, like in Australia, there's the CRYP ETF, which is designed and issued by Beta Shares, that doesn't directly invest into Bitcoin, but actually invests into companies that have exposure to Bitcoin. So companies like Coinbase that I mentioned earlier, or MicroStrategy, businesses that either are mining Bitcoin or have some involvement in Bitcoin but aren't directly Bitcoin. The benefit of this is that you're obviously diversifying across different business models that are benefiting from the Bitcoin ecosystem. The disadvantage is that sometimes these share prices move in different directions and aren't perfectly correlated, or they don't move in the same way as Bitcoin. So your returns aren't going to perfectly match with Bitcoin. And actually, Bitcoin over many time periods has done better than these underlying companies with exposure to it. But it is another way to get exposure to the overall theme. And I think they're the three key ways people look to get access to Bitcoin, either directly through a hard wallet or buying it and leaving it on an exchange, buying it through an ETF structure, which has become very, very popular over the last couple of years, or finally buying an ETF that isn't a Bitcoin ETF, but a Bitcoin themed ETF. And I should say, in addition to all of this, this isn't an endorsement of buying Bitcoin. Certainly, it's a very volatile asset. Over the last 10 years, it's seen multiple pullbacks of 80% plus. And so you really need a high risk tolerance, and you need to risk manage Bitcoin within your overall portfolio if it's something you're considering, because it's an asset with a high level of volatility, and it's not an asset that necessarily you should be putting all of or a lot of your money into.